Yo, what is up, guys? Camilo here. I hope you're well. So if you missed last night's video, we were quickly, let me touch base on that real quick. We were talking about how the 50-day simple moving average should be the next level or the next area of clear support for the SPY. That'll be the make or break area to potentially start considering the top that I also presented to you guys, the alternate count or the alternate Elliott wave analysis for the SPY in yesterday's video. So if you missed that one, I do encourage you to go watch it because you'll clearly understand the alternate version of this count, which suggests that we may see a pullback coming really soon. Okay, just as long as we hold these zones that I'm about to outline for you, we should remain optimistic that further upside will be seen on the markets. Now, why am I saying the 50-day simple moving average is critical? It's because we've been holding that line as clear support ever since October 2020. So you see here a clear progression to the upside, the 50-day simple moving average carrying the markets up. All right, if we are to lose this zone, then we may start dipping and looking for the 200 at that point. Okay, now turning over to the count. Okay, the 441 spot 78 is a very critical level that we must keep our eyes open for. And why is that? Because that level and that area falls in line with this zone of support and our 50-day simple moving average. Of course, as the days goes by, the 50-day simple moving average keeps on going up and it should meet with the price action, okay, with the candles. Now, the zone is clear resistance, right? It was resistance here and during these highs, and then we finally broke above it, but we did not maintain support. We found support at, hovering over the 50-day simple moving average, and then we broke above it and we made new all-time highs, and now we're looking for another level of support to establish a base and then push on higher. All right, guys, so let's dive down to the wave count on the 30-minute time frame, and we'll look at what that looks like. Now, the bulls defended the zone clearly with what we're looking at here. All right, so from the August 19th flow, we made a 5-wave impulsive structure: 1, 2, 3, 4, and 5 to complete the wave 1. And now we're looking at a wave A, wave B to find 1272 external retracement resistance, and now we're looking for the wave C to complete. All right, we're not too far off from that critical level that I was pointing out to. We're about, it's a significant downside of 1%, 1.10% in the SPY, but nevertheless is an area that we should keep our eyes open for. However, if you clearly see the 50% retracement of this overall advance held clear for support for the bulls, and we found interest, and now we may start pushing higher. Okay, let me turn off these lines here for us so it could be a little bit more clear. Now, if this is to be true, then wave 2 should come into support, okay, because the 1618 also of the small degree was support within this wave structure, and then the 50% retracement was support for this higher degree wave structure. All right, so those are two confluence levels, levels that have confluence, that clearly you see that the bulls found interest in. All right, and that coincidentally falls in line with several key levels here that are holding support as well. All right, guys, so that's the SPY. So the levels to be watching for are the following. All right, we should be watching for the 444.97 as support, 444.51 as support, and the last level of support would be the 441.78. All right, guys, if we hold those levels, we can consider the SPY that have bounced and found support, and we are in the third wave, okay, of this higher degree wave structure. All right, guys, when we start looking for breaks of previous all-time highs, we will then determine where our next possible targets could be. So as you can see here on our watch list, the Qs were the only indice in the red. All right, and that's okay. Now, the way our wave count is working here is that it's clearly respecting our fib levels. Okay, so from August 19th flow, we also went up in 5 waves: 1, 2, 3, 4, and 5. A, B, and C pullback to come into the 38.2, between the 23.6 and the 38.2. So these are clear levels that we've been talking about in this channel. I really encourage you not to miss my videos because I do point these levels out for you, and they've come to fruition. And so using Elliott wave and Fibonacci levels as a tool, as a guide for your trading strategy could be ideal and could be very powerful. Okay, if you want to join the Discord group where we share ideas and we share our Elliott wave analysis for the indices and for any chart that you want, The link to the Discord group will be pinned down in the comment section. Totally free to join. Okay, once you join, we'll send you the information as to what you can expect in the group. And if you want to stay, good. If you don't, then no hard feelings. All right, guys. So I do hope to see new faces there. And all right, so I shall see you guys tomorrow. Not yet. So we still got to review 2 more charts here. So what are the levels that we're looking for to hold? The 373.87 and 377.23 for the Qs. All right. So the SMH, guys, the SMH is also in a corrective wave structure. So from the August 19th low, up in 1, A, B, and C pullback. Now you start noticing that the 1272 on both the Qs, okay, the SPY, okay, and the SMH has been resistance. All right, so that's okay, because that gives us an opportunity to keep on, looking for lower price action to take advantage of a dip buy opportunity. So what are we looking for here? We're looking for these levels. Let me update this real quick. Not that we broke a new high here. When was this? On September the 9th. All right, we're gonna look for the next possible levels of support. So the 1618 is the next level that we should look for, and the 1618, yeah, that's typical here. All right, so the 1618 is our next level. Then we look for the 38.2 and the 23.6 of the higher degree. So as you can see here, the SMH may have a little bit more downside to go. Okay, just as long as we remain south of the 1272 and we don't find new highs, or we can't break above this resistance line that has been holding the price action low from September the 9th, then we can anticipate that we may see further price action. All right, sorry, to the downside. So look for 268 to 264 as a range for support. Ideally, we want to see 275 and 276 break to the upside. IWM bounced today very nicely. Okay, we bounced off the 50 simple moving, the 50 retracement support. Sorry, it's been a long day as always. All right, so from the August 19th low, up in 1, down in 2, 3, 4, and 5, wave 1 completion. We're gonna consider that wave A is here, because this is a really short wave A in relation to the overall C wave structure. All right, so by shifting or moving the count one swing over, we're still running the possibility that perhaps we still have a little bit more downside left to go. Okay, but if not, then the 50-day I keep on saying the 50-day, the 50% fib level is clear support here, because as you can see here in the price history, that was this level, the previous wave 4. And I've told you guys before, the previous wave 4, always look for that to hold support. All right, guys, so that's it for me today. I hope that you guys enjoyed this brief update. Today's Monday, and yeah, the rest of the week, tomorrow, watch out for CPI. As you know, CPI measures inflation, and that's something that the markets are really looking forward to for the print. Not that they're excited, we're just looking to see what inflation was for last month. All right, guys, so thank you so much. Thank you for subscribing. Give me a thumbs up if you like the video. Click that bell notification so you'll be notified when I upload these videos. Leave a comment down below. Love to interact with you. And I shall see you next time tomorrow. Bye.